I want to talk for just a second about partnerships. And this is a question that people ask me a lot when they're newer to multifamily. Probably because one, I tell them you really need partnerships to get these large deals done, in my opinion.
I just found that these larger deals, you need a team. It's not something you can do on your own. It's complicated stuff. It requires more than one person to really be successful at this.
I agree with all those points. And I think, it took me a while to realize that this is a team sport. Like Ryan said, your focus can only be on one thing at a time, and you need to bring on partners who are better at the things that where you lack.
What advice would you give to someone starting out in this business that they're like, either I can't find deals and I want to, or I can't find investors and I want to?
Yeah, I'll start with that.
Hey everyone, and welcome to another episode of the Apogee Wealth Podcast. I'm particularly excited about today's episode because I get to feature a couple of my very near and dear partners on a couple different deals and just pick their brains about all things real estate investing and multifamily. And so they have very interesting stories, and I'm excited to share that with you today. And so, without further ado, Ryan and Kevin from Westline Equity, welcome to the show.
Thank you, Jonathan. Appreciate you having us on.
Yeah,
Excited
thanks
to
for
be
having
here.
us, Jonathan.
Cool. Well, we'll see how good a host I am with two guests at once. I think we're going to have a lot of fun, but I'll try to call on you individually a little bit. That way, we don't talk over each other too much. But first of all, just for the listeners that don't know you, which is maybe a few on my podcast, I want to just hear a little bit about your background and your story getting into real estate. Kevin, if you want to go first, and then Ryan, you can go after that.
Sure.
Definitely. Well, thanks again for having us, Jonathan. I'm really excited to be here. So I started in real estate sort of from the ground floor, and I think a lot of people have similar stories where I was given the Rich Dad Poor Dad book, when I was close to graduating from college, and it really resonated with me of, building your wealth in other ways, just working a W-2 job. So that I kind of caught the bug through the Rich Dad Poor Dad world and started investing in real estate with my father, buying small single family condos in the town we grew up in, um, and um, and I kind of cut my teeth in the small single family world and eventually started to scale up to some smaller multifamily like duplexes, triplexes. I house hacked my first multifamily deal in Philadelphia, Pennsylvania, which I hold near and dear to my heart because that kind of really got me into the scalability of real estate investing, where I lived in each unit, renovated them, and then was able to refinance and do it all over again with other properties. So I was a little bit tapped out on capital at some point and figured I was looking to scale even more and needed to look into um, some some growth markets where I could, get in at a lower barriers to entry dollar point. So I started investing in Northwest Arkansas, where there was a ton of growth in that market, and from there, just continued to scale up and started investing with some partners like Ryan and Jonathan, and have scaled my portfolio to almost over 300 units now with an acquisition we're doing next week with we're closing with Ryan and Jonathan here. So that's sort of the short story. There's a lot of fun tales within that. The growth of my real estate portfolio, but I'll leave it at that. But it's been a fun journey, and I'm looking forward to scaling up even further.
Cool. Thanks for sharing, Ryan.
Yeah. So I have a little bit of a different background in real estate. I grew up in it. My grandfather, my great uncle, his brother, and my father were all in multifamily real estate. They were actually contractors and developers in the Los Angeles area. They started out um, building for others and building mostly multifamily, and then over time just leveraged their success and started buying their own properties, buying land, and building their own properties, and then self-managing. And so, I mean, that was the family business. So, I grew up, my father was in construction. He was still building for others. He was also managing the family office here and managing the family's assets alongside my grandfather. So I started working summers. I was labor. I was maintenance technician assistant. I was vacancy cleaner. He had me doing every dirty job that they could possibly get me into, visiting job sites. And then after college, he needed some help with the business. A couple of key people had retired, and he needed some help kind of getting things going, and decided I'd work with my grandfather and my father, and see how that went, and never looked back. So we started assisting with the day-to-day property management. Started getting into third-party property management, and started my own property management company and maintenance company. And we ended up, self-managing still our family's assets, and also growing into managing for third-party clients. As I said, started our own maintenance company. I got my broker's license eventually, and started representing clients with buying and selling their assets, mostly multifamily. And then my family dabbled a little bit still in investing. They were a little bit stagnant for a while, and kind of kept just self-managing, and not really growing on the investment side. But every once in a while, here and there, we would sell or buy a new asset. And so, yeah, that's where it all started for me. I've been in the multifamily space for almost 30 years now. Um, and but only really getting more active in multifamily syndications, and growing a portfolio outside of California, and in the last couple of years here.
Yeah, that's awesome. It's interesting how, I think a lot of people they hear the podcast, in particular if they're coming to it interested in learning more about large scale multifamily, they think that maybe you either have to have a certain background, or your first step forward is simply going out and buying a 100-unit apartment complex. But across all three of us here, who each have different stories, different backgrounds, that wasn't the case, right? Like Kevin, you and I start out maybe a little more similar, buying single family and then just scaled up over time. Ryan, you were in the multifamily business, but started out doing the individual components of it, and then eventually worked your way up to, managing a very large portfolio. And so I think that's really important to highlight for listeners, because sometimes people think, oh, if I'm not getting a 100-unit deal done when I just picked up a first book to read about real estate a week ago, I'm doing something wrong. And that's simply not the case, right? It's a not a get rich quick scheme business. It's rather something that can be really powerful if you take the time and give it the time to grow and learn the skills necessary to be successful. So obviously, all three of us are in multifamily. We all do, large apartment complexes. Here in Texas is at least one of our target markets here in Dallas Fort Worth area. I want to talk for just a second about partnerships. And this is a question that people ask me a lot when they're newer to multifamily, probably because one, I tell them you really need partnerships to get these large deals done, in my opinion. But what I want to ask both of you about that you did maybe a little different than some people is you made like a business, a legit partnership from the get go, right? There's three of you in Westline Equity, all really great people, all different skill sets. Can you maybe just talk a little bit about that for a minute, and just kind of how you decided to form the partnership, what that looks like, and maybe how you feel it's benefited you thus far?
Sure. Yeah, I guess I could start. Um, as I said, I've only been in kind of the multifamily syndication space for a short time here. And it started out where I was looking to get more involved in investing on behalf of my family and our family's office. Um, we were so used to just investing kind of small, mid-size multifamily, not getting into larger stuff, and only really doing it in the like greater Los Angeles area. And so I decided I wanted to kind of pursue some other paths, and kind of looked into what would be sort of the best way to invest on behalf of my family, and kind of always knew about syndications, but what didn't have much experience with them, and decided I wanted to learn a little more about that and also kind of hone in on my underwriting skills. So I joined a coaching mastermind group, and with the intent of just kind of honing my skills a little bit, learning, there's always a process. There's always something new to learn, no matter how experienced you are in real estate. And when I joined that group, I quickly realized that one of my other intentions was to find business partners. I just found that um, you know these larger deals, you need a team. It's not something you can do on your own. It's complicated stuff, and it requires more than one person to really like be successful at this. So I was looking for a team from the beginning, and Kevin and I met about over a little over a year ago. Same with our other partner Garrett, and we hit it off really well from the very beginning. Kevin and I just started informally underwriting deals together and just working through them together, and just to kind of see like how we work together, how we think, how we align with what we're looking for, and just quickly, I think, found like a great connection, and that we were really aligned, and decided we really wanted to just move forward with working together. And same with Garrett, our other partner. We also kind of just saw eye to eye about things from the very beginning, and we all have different experiences and different talents. And I think that's another important part about a partnership, is you find partners that have talents in different areas that you don't necessarily have. I'm not great at underwriting. I know how to do it, and I wanted to learn more about it when I first joined this program, but I'm not a great underwriter. Kevin is awesome at underwriting. This is just one of his great talents, and I quickly realized that and thought, okay, I need to capitalize on this. So we need to partner up so that I don't have to rely on my underwriting for these deals, of which I didn't trust at the time. So that's kind of how it started. I mean, my intent from the get go was to find partners that I could work well with, that we can take advantage of each other's talents, and grow from there.
And I'll just chime in. I agree with all those points. And I think, it took me a while to realize that this is a team sport. Like Ryan said, your focus can only be on one thing at a time, and you need to bring on partners who are better at the things that where you lack. So I think that's super important when growing in this business. I've always used partners. Um, even on my smaller portfolio, back to working with my parents as my first investors. You need to bring others along for the journey, and leverage their strong skills. And I think team is extremely important. I always thought I could do it all myself, but when partnering with other folks, we just go much further. And I'm excited about continuing, partnering with new folks. We're always talking to new people to potentially partner with. So it's definitely an important part of real estate investing.
That's awesome. You both mentioned, and obviously we come from the same, mentorship ecosystem. And, I want to talk just for a second about, having a mentor, having someone help you in this space with the different skill sets when you're starting out. There's some people out there that they're like, hey, I can learn everything on the internet, right? I can go find a book, I can go listen to podcasts like this and kind of figure things out. There's other people that are like, wow, I absolutely want someone to help me figure things out. Not talking about specific programs, but just generally, what are y'all's thoughts on mentorship, on having someone help you in real estate investing, particularly large scale multifamily when you're getting started?
Yeah, I can start with that one. I think mentorship is really important. One of my mottos in life is find the person who has the answers to the test. And,
Mm.
that goes into, you know, speaking with people in your industry who have done it before, because you can cut out so much of the minutia, and wasted time and energy, and just go right to the growth. So I think mentorship and coaching is really important. It's something I'm always interested in investing in. In my education, that goes along with it, because from coaches and mentor, you can, learn different avenues of success and different asset classes. So, you know, mentorship is something I'm always focused on.
It's awesome.
Yeah, no, I would 100% agree with that. I mean, yeah, I've always, I think, trying to take advantage of a mentor in my professional career. I mean, when I first started, it was my father and my grandfather, right? They were experienced in this business. They knew, everything about it, and especially in the area we were operating. And so I relied on that highly, and took advice, and had sort of a formal mentorship with my father for quite a long time. And then when I started my brokerage business, I felt like I had a great amount of experience, and I knew what I was doing, but there were other people out there that were much more successful than I was, and they were doing it better. So I found a mentor who had grew a very successful brokerage business, and worked with her for a number of years, and coaching and mentorships, having weekly calls, and goal setting and all of those kinds of things. And then again here with the multifamily investing, I think that there's always something to learn. There's always someone out there who has had the experience that you haven't had yet, that you can learn from without taking years to learn it, and without making maybe all the mistakes that they made. And so just leveraging a mentor, someone who has that experience, that has kind of been in your shoes, but maybe they were in your shoes 10 years ago, not today. That's extremely valuable. So I just think no matter what career that you're in, I think having a mentor that has that experience, that has lessons they've learned that they can teach others, is extremely important.
Yeah, I mean, obviously, I couldn't agree more. And I don't know if you guys have heard her say this or not, but Paula always tells me when we're looking to go maybe do a new market or a property manager, vendor, whatever. She's like, find the person that's already paid the dumb tax. That's what she calls the equivalent of what you said,
Yeah.
Kevin. Right? Like, don't be the one to pay the dumb tax. Learn from the person that already paid it. And, it can save you a lot of time and frustration for sure. So
Absolutely.
you guys started working on multifamily in Texas. Closed first large deal here in maybe February or 1st of March timeframe. Now we're working on one together that we're going to close hopefully this week, and so can already talk about it because this will air next week, and we've already raised all the funds for it. So we're excited about closing that deal here in Arlington area. But let's talk about the first deal a little bit. Whatever you're willing or open to share, stories, lessons learned, something that might be interesting to the listeners. I'll just let you, kind of go free for all on it. But tell us a little bit about that first project.
You want me to start? Okay. So that was an interesting one. It's 121 units in Fort Worth, Texas. And, it's a straight C-class property, heavy value add, a lot of issues. The previous owner was underwater, and, needed to sell, and sold at a loss, and quite a substantial loss. And but for us, it was a great buy at a great basis. And yeah, I mean, it was a challenging transaction. I think that it was very difficult to work with the seller. I think that we had a lot of communication issues, a lot of things that were not communicated to us that maybe should have been. Um, uh, we ran through a lot of hurdles every step of the way, to the point where, I mean, the biggest hurdle, we were, you know, just a few weeks from closing, and we found that the agency loan that we were working on was not going to work. That Fannie came back with kind of a change in proceeds, and a change in the terms that we were relying upon for our underwriting, and it was just no longer going to make sense to go with that loan. It was mainly due to operational issues that vacancy, and other issues. There was a lot of deferred maintenance, and just a lot of different issues of the property. And it just sort of got worse throughout the transaction. So we had to pull out of agency and decide whether or not we were going to proceed. We had a loan contingency on the deal, and we could have backed out at that point, but we decided we were going to stay in it. We found another lender that was willing to lend. Wasn't as good of a loan as far as terms and whatnot, but we were able to get the proceeds we needed, and we were able to still close on time as far as I'm concerned. I mean, the there were some delays. Um, there were lots of liens on the property. There were all kinds of other barriers that complicated this deal. But in the end, we got it done. We got it done within the time frame that we needed to do it in. Um, I think it's going to be a great deal. It's just the first year has been so far. It's been challenging, and will continue to be while we try to lease it up and get through all the issues that were caused by previous ownership. But we will get there.
Just to add to that, I think this deal really cemented the the notion that you need to have good underwriting. As soon as you start looking at a deal, your underwriting, it has to be conservative because we hit a lot of roadblocks during this deal where we had to go back to our underwriting and continue to tweak things in a more conservative fashion. Where we felt comfortable that we could continue moving forward with the deal. Obviously, like Ryan said, we hit a lending debt roadblock, and we had to, there was many decision points during that process. And I think, because we underwrote conservatively, we were able to continue to feel conviction that we had a really good basis on this deal, and that we, continue to move forward. And that underwriting just continued to evolve. We probably had 30 versions of our underwriting model, maybe even more, which is always fun. But we always felt conviction in the deal, and then also keeping investors updated along the way. We obviously had a lot of changes in the deal, and it's imperative that you keep investors privy to those changes, and making sure they feel comfortable with the path forward. And we set up calls with investors as we were going through the process, and just making sure that we still had their vote of confidence. So yeah, it was a very difficult deal. Definitely the hardest that I've ever done in my young career in real estate. But there was a ton of lessons learned. Feel like we could write a book about it. And it's wild because this current deal that we're working on just seems like a walk in the park compared to that. So and then we're executing on our business plan currently, and we're pushing hard, and it's hard work, but we're it all goes back to that conservative underwriting, and we feel comfortable with where we're currently at, and we're going to continue to work hard.
I hope you're enjoying the content of this episode. I want to take a quick 15-second break to thank our sponsor for this episode, which is Apogee Capital. Now, Apogee Capital is our private equity firm that we allow investors to participate in large-scale multifamily investment opportunities through. If you're interested in being a passive investor and would like to learn more, you can find information on our website, www.apogee.com. Link is in the show notes. Now, thanks and enjoy the rest of the episode. Yeah, that's awesome, and appreciate you willing to share that recap. Yeah, I can say as someone that had a line of sight on the transaction and what was going on, it'll probably be a while before you have one that difficult or more. And so
I
that's
hope
the good
so.
news, right? You start out with a really tough one, and it does seem a lot easier going forward. But I think that one common theme in every transaction I've done is like there are always challenges, right? Even ones that just they seem perfectly laid out. There's always something that comes up. Usually, it's not getting the loan pulled and having occupancy drop and challenging sellers all together, but there's always something that comes up you have to work through. And you guys really showed, hey, we can get through this, like we can stick with it, obviously when it makes sense. and get through what we need to in order to see it through successfully, and that's really cool. So definitely congrats to you both for doing that. It's onward and upward from here.
Thank you.
Um,
Thank you.
a lot of new investors, they really have two issues they're trying to solve, right? They want to find deals and they want to find investors, which you guys have now done both across a couple transactions. What advice would you give to someone starting out in this business that they're like, either I can't find deals and I want to, or I can't find investors and I want to?
Yeah, I'll start with that one. So I think obviously those two things are the most important um, tasks in your real estate business. Is finding good deals and finding the capital sources to fund those deals. Um, what where my mindset kind of shifted over the last probably 2 years is that you can't do both, and that's where a team comes into play here. Is that pick one of those and focus all of your time and energy on that, and find a partner who can do the other one. So if you're interested on the acquisition side or like the underwriting piece, like talking to brokers, like the sort of the art of the deal, then maybe that's where you should focus your time. And then find someone who can focus on the capital raise side, whether they bring their own capital or can raise capital from outside investors. And obviously, there's going to be overlap into both with your partners, where you'll be doing a little bit of each. Where I always raise for our deals from my investors, that have invested along with me in my smaller portfolio, and then a lot of my time is focused on the acquisition side and underwriting. So that's I'm always hopping onto that side. So I think having focus is one of the key things in that way. And then um, you know, having a daily plan on each. If your focus is capital raising, then I'm reaching out to 5 new potential investors and talking to people, telling them about my real estate business. If it's looking for new acquisitions, it's talking to 5 brokers per day. That's a lot of brokers, but sometimes that's what you have to do to get deal flow and start underwriting deals. So I think it starts out with focus and then having a plan.
Yeah. Yeah. No, I 100% agree with what you're saying, Kevin. You definitely need focus, definitely need to plan, and just a process that you follow to kind of step by step to kind of accomplish your goals there, and and just I can't emphasize enough of what kind of we've already discussed here about being part of a partnership, finding someone, if you're, as Kevin is saying, if you're raising the capital, finding someone that's going to help with the finding the deals and help with the acquisitions. It really the people that I've spoken to over the years that try to do it all tend to not really do anything, or they
Mm.
maybe they do some, but they can't scale that. It's not manageable, right? So I've talked to a lot of people that just where I've actually advised, just encouraged them to find other partners and find people to work with that can, as a team, accomplish your goals. And some have done that. And others I've seen kind of still try to go solo, and they're still trying to do it solo and not getting very far. So I think it's just there's a lot. This is a tough business as it is. It's not easy, especially when you're an active in managing the deal and active in the acquisitions. And Yeah, if you want to be active, it's not something to try to go alone on. That's for sure.
Yeah, all really great bits of advice. Um, yeah, kind of pivoting now. Talking about the past to the future. Obviously, we've already mentioned the audience. We're closing a really awesome deal next week, or this week, closing this week, and then you'll get to hear about it next week, I guess. That we're excited about. But what's the future for Westline? What do you guys want to accomplish? What are your goals over the next year or two?
Yeah, we were just talking about this, Kevin and I. And I mean, we're really excited about this deal, and we're really excited about investing in the DFW market. It's just such a great time right now with the kind of basis that we're seeing. I mean, we're at sort of a low point in the market. We're seeing a lot of distress. So for a lot of people, it's been challenging, but for us, it's created an opportunity. And so, you know, I I foresee in the short run, the next couple of years here, that we're going to stay focused in the DFW market while we're seeing this distress and the kind of basis that we're seeing. Um, and I'd like to get grow a portfolio within the next 2 years of 1,000 units in the DFW area. So that's our goal. We're about to hit a little over 300 with this acquisition that you just mentioned that we're closing on hopefully this week, and hoping to do a couple more deals this year, and then hopefully next year, hit the ground running, and we'll do a number of deals next year as well, to hit that mark. I think that the opportunity is there. The uh, the the market is in a good spot for us to do that kind of that kind of acquisition growth, and then go from there. So I'm sure eventually we'll span out in some other markets, but I'd like to just focus in one market right now, build that portfolio there while we have plenty of deal flow. There's plenty of opportunity, and kind of just leverage the people we have in DFW, including yourself, and the property management companies we know, and the relationships that we have there, and then span out from there.
Yeah, and just to echo all that, um, and maybe to steal something that I heard Jonathan you say over the last few months when as we've been marketing our deal is if you ask some investors, if they would have bought more during the GFC, they'd emphatically say I would have bought everything on the market. And I think the three of us here maybe feel like that this is a similar type of time in commercial real estate with valuations being reset, and it's a great time to be buying. When others are fearful. So yeah, we obviously feel really excited about the pipeline and some of the deal bases that are out there right now. So yeah, we're hoping to hit some of our goals, and obviously goal setting is important to us. So we kind of align our daily tasks to those goals. Like what do we need to be doing to hit where we want to go? And yeah, so super excited about the future of Westline and partnering with people like you, Jonathan, and Apogee. So we're excited about the next 2 years.
Yeah, that's awesome. And, just to kind of, I guess, get potential investors hyped up a little bit about the current situation in DFW. It's tough. I would say multifamily, and I was not around as a real estate investor in 2008. But I do have a lot of friends that were, and, single family definitely took a huge hit. And I think multifamily did to an extent, but I think there's a lot of people that would argue multifamily is actually in a worse position, a better buyer's market today is how we would look at it than what it was even in 2008. And just to give you an example, I toured a deal last week. Think great location, beautiful, 80s deal, but very nice deal, stabilized, so the deal's running well. There's been no like management issues, anything like that. That's the whisper price on it's $23 million. And, the broker told me the loan balance, so not what they paid for it, the loan balance on the deal is 28 million. And the previous owner paid $35 million for the deal, which if you do the math, that's like a 40% haircut from the top of the market, right?
Wow.
It's unbelievable. Like equity obviously completely wiped out, even the lenders losing millions of dollars. And when you're in that kind of situation, like if that's not a buy signal, like I don't know what is, right? Like no, DFW is not going anywhere. There's 400 people a day moving to North Texas in general. So there's people coming in. All the new construction is either complete or being completed immediately. And then there's no new supply coming after that. And so you just look at the numbers and the overall situation, and it really paints a good picture for people that are able to go in and buy deals now. and hold them for, 5, 6, 7, 8 years in the future.
Yeah, I think that's really interesting to hear. Obviously, we're seeing a lot of that too. Um, but from a passive investor standpoint, I think that's really interesting to hear because, as a real estate investor, you kind of have two choices. Either you can, maybe buy a duplex yourself, triplex yourself, and run it all on your own, or you can invest passively in larger deals and with sponsors who do this, for their living. And I don't know if smaller multifamily is feeling as much pressure and distress as some of the larger stuff, and maybe that's because of the debt structures. So you might not be able to see these type of re-ratings and valuations on the smaller multifamily side. So if you really want to take advantage of this uh, valuation decompression, maybe I would love your guys' take on this too, but I think maybe the larger scale multifamily could be a better place to place money right now.
Yeah, I agree. 100% I agree. Yeah, no, we're not, I don't think we're seeing the same, um, value adjustments in the smaller multifamily spaces as the larger ones. So there's definitely more opportunity there, in the next couple of years here, and no, it's and you just you're when you buy a larger property, you're already diversifying and scaling. You have 100, 150 units, 200 units, as opposed to a triplex or a duplex, where you get one vacancy and half your income is gone. So it's just it's, in my opinion, a much smarter move right now with what's happening in the market.
Yeah, I think one of the big difference, I mean, Kevin hit the nail on the head, is like, I own small multifamily here in DFW as well. And, all my small multifamily deals, I put 30-year fixed rate debt at 3.5% on back in 2021, 22, right? And so there's no worry about debt structure for another 25 years. Whereas most multifamily, particularly in an overvalued market like DFW in the 2021 timeframe, people were using high leverage floating rate debt, which really extends what you can pay for the property, but it also doesn't give you any wiggle room when valuations come down the way that they have. So, yeah, that's a lot of what we've seen. Um,
Yeah.
Kind of shifting now to head towards closing. Two final questions that I'll let each of you answer. One, and it's maybe a little bit of a repeat of a question earlier. For someone out there that's listening to the podcast, they're just starting in multifamily. What is one thing you wish you would have known that you would share with them today as they're getting started? And then two, how can people get in contact with you if they're interested in reaching out?
You want me to start? Okay.
Go for it, Ryan.
All right. Um, let's see. What's one thing that I would have? Yeah, that's a tough one for me because I've been in this business a long time. I think if I did it over again, I wish I would have started sooner in the like syndication space. Right. I've
Mm.
been in multifamily for a long time, and helped others invest in multifamily, and have helped my family invest in multifamily over the years as well. But I didn't really get involved in the syndication space until more recently, and now that I am, if I knew it, if I could do it over, I would have started sooner. So I guess my advice would be, if you're interested in this, don't sit on it for years and think someday maybe I'll get there. Find a good mentor, find a good coaching program, learn everything you need to learn about it, and then start. You learn really most by doing, in this business. You need to get through a deal. You need to see the process from start to finish, and work through the underwriting and work through all the steps that you need to work through. And you don't learn it the same unless you're in it. So obviously there's some education that needs to happen, but I would say educate yourself and then get going. Um, and sorry, what was your other question?
How can folks get in
Oh,
contact with you if they'd like to reach out?
yeah, I think email is probably the easiest for me, Ryan at westlineequity.com. I'm also on LinkedIn. You can find me there as well. But email is usually the best place to reach me. Ryan@westlineequity.com.
And then
Cool.
from my perspective, I wish I would have networked in the industry earlier. I spent a lot of time reading the real estate classic books and saying, "Oh, I know most of it, so I can just go do it myself now, and I don't really need to talk to anyone about it because I've read all the books." I wish I would have just networked, sooner and talked to folks in different asset classes, different sectors within real estate, just to understand the landscape and meet people, hear their experiences, hear what works, hear what doesn't work. I think I would have grown faster if I would have met more folks, and maybe would have made less mistakes. So I think it's important to network. It's all about your Rolodex, and I wish I would have started that sooner because I've made a ton of good relationships, like Ryan and Jonathan here, that I wish I would have made sooner. So that's definitely one thing. And then in terms of getting in touch with me, same, I'm best over email, Kevin@westlineequity.com. I'm on LinkedIn as well. I'm off the grid on most other social media like Instagram and Facebook, Twitter. But yeah, definitely reach out over email. Would love to connect with people. Like we said before, Ryan and I, we're always interested in partnering with people. So feel free to reach out.
Awesome. Ryan, Kevin, thanks so much for taking the time today to visit for a bit and share all your knowledge and insight with the audience. I know we're all better for it. And so, really appreciate you taking the time to be a part of the show.
Thank you,
Thank you.
Jonathan.
Appreciate you having us. Thank you, Jonathan.
Awesome. All the listeners, thanks for taking the time to listen. And we'll catch you on next week's episode. Thanks for tuning into the Apogee Wealth Podcast. I certainly hope you found something valuable in this episode that you can take with you and apply to your own investing journey. If you found the show valuable, you can subscribe so you don't miss further episodes. And if you'd like to learn more about ourselves or our company, you can visit our website, www.apogeemfc.com. We have a ton of educational resources that I'm sure you'll find quite valuable. Until next time, happy investing.